Welcome to the month of April, and today let's talk about the truth about kill zones, and that's trying to understand when to trade them and when to stay out. This is a TFTL education series. What are kill zones? Even before I define the kill zones, what you need to understand is that kill zones don't make you profitable. Trading them incorrectly can actually make you lose faster. So when you talk about kill zones, they are high liquidity sessions like London and New York opens. And we always see increased volumes and volatility during this particular period of time. So, but here is the problem. Most traders that treat kill zones as guarantee opportunity, when in reality they are just periods of increased potential, they lose, right? So that is what you need to understand. So mostly this video will be very insightful or helpful to traders who only trade during kill zones but still struggle. Expect setups to appear every session, overtrade during high volume hours, or feel confused when kill zones produce less instead of more wins. So they produce more losses instead of more wins, right? So kill zones are basically what I can call areas or window of time which only reveals opportunities if they exist. Okay, they only reveal opportunities when they exist, right? So, and you understand that why traders over rely on these particular kill zones, right? Because we realize even if you're trading the kill zones, most of the traders, they do over rely on them, right? So understand that kill zones, they refer to the windows or time window where liquidity increases, volume rises, and institutional activity is active. Common examples, we have Asian kill zone, London kill zone, New York kill zone, and also the London close kill zone. Others might call London open, New York open, and London, New York overlap kill zones. So these periods often produce expansion, liquidity sweeps, and strong directional move. But timing it alone is not an edge. So why you find most of the traders over rely on this is because most of the traders, they think if I trade during kill zones, I'll catch the move. So they sit at charts waiting for activity, take trades out of boredom, force setups that don't exist. And kill zones, they create movement, but not always direction. Therefore, you need structure. And without structure, even if you're trading kill zones, movement become noise. Okay, so never assume that kill zones is more activity, which is equals to more profit. Always ensure that you trade kill zones only when you see valid setup or when you have a structure, right? So when I talk about this is structure, this is what I mean. When kill zones now works best, this is when you want to understand when kill zones work best. So kill zones are most effective when combined with liquidity, higher time frame buyers, clear structure, and defined setup. So still the three themes: structure, liquidity, and time, repeating itself again, right? So for instance, a liquidity sweep before London open, price in discount in an uptrend, confirmation during a session. These are good example how to use the kill zones effectively, because now timing plus context helps you to align. So if you align the context or if you align time with context, then you get high probability setup and you get the best out of these kill zones. And that's where opportunities exist. That's where opportunities exist. Okay, so ensure clear setup before the session begins. That is meaning that you've already done your analysis before the kill zone time, right? And therefore now align with the liquidity, structure, and buyers. Okay, so an example of a setup is like I'm talking about is maybe probably when you have liquidity sweep, right? We have a liquidity sweep plus structural shift plus session timing, which is equals to high probability. So when you look at this kind of chart here, you see the price has taken out the buy side liquidity. We have come here. Initially, we see the price pushing on the downside, meaning it's a downtrend. But at this particular point here, the market creates a change of character. Here, we get a change of character. And therefore, we mark our order block and wait for the price to come here so that you can take a trade. So you have to confirm the time that the price came to the order block. It should be within a kill zone, right? So that's a perfect example or ideal setup. Okay, so when to avoid kill zones? Of course, you want to avoid the kill zones when these three things are present. So this is where most of the traders go wrong. You need to avoid kill zones when no clear setup exists, because activity without structure leads to random outcomes. Even if these are the periods when you're anticipating high volatility, a lot of activities, liquidities. So without structure, without clear structure, then there will be random outcomes. Number two, avoid kill zones when you miss the setup before the session, because chasing late entries during volatility increases risk. So if you miss the setup, let it go, right? Let it go. Then the other one is price in the middle of the range. Avoid the kill zones when the price is in the middle of the range, because no clear liquidity target is equals no clear direction. You are likely to lose from that particular trade. And then emotionally driven. If you're emotionally driven, right? If you're emotionally driven, then avoid trading, even if it's during the kill zone, because high volatility plus emotional trading will lead to poor decisions. So what kill zones does is that they amplify both good and bad decisions. So you need to come away of trying to filter, right? Trying to filter. Remember, the common mistakes is trading every session, chasing every moves, and ignoring the context. Trading every session, right? So if probably you get a trade during the Asian kill zone, I think one trade in a day is okay, right? One trade in a day is okay. But another mistake is trying to trade maybe more than 2, 3 setups in one session. If it's the London kill zone, just get one setup, be contented with that. Stop chasing the moves. When the price has already left you, don't chase the moves. Remember, there'll still, if it's Asian kill zone, there'll still be London kill zone coming, there'll still be New York kill zone coming. Even if it's during the end of the day, the New York kill zone, the last one, there'll still be tomorrow Asian kill zone, London kill zone, and New York kill zone. So stop chasing the moves. Then never ignore the context. Remember, you begin with the buyers, right? Then you confirm with your checklist. And if your checklist doesn't confirm, if any of the aspect in your checklist doesn't align, then there is no trading. So in a nutshell, never ignore the context. If you are bullish, concentrate on buying opportunities only. Sell opportunity will still form, especially when the market is pulling, is on a pullback. So never enter sell if you're in a bullish trend. Never enter buy if you're in a bearish trend. Always stick to the context, what the market is telling you, right? So this is the correct mindset or the right mindset for kill zones. Instead of thinking I must trade this session, think if my setup appears during this session, I'll execute. Kill zones are filters, not triggers. So they tell you when to pay attention and not when to act blindly. Therefore, patience during high activity is also a skill, right? So trade the setup, not the time. We are looking at the setup, not the time per se. Only that the time is helping us to understand when we have high activity. Okay. So be selective even during high activity. You need to be selective. What are you taking? And that's why you are looking at the context. If it's bullish, only select bullish setups only, buy setups only. If the market is bearish, only select sell setups only, right? Because that is very, very key for you as a trader. Okay. So some of the key takeaways from this particular video is that timing supports your hedge. You just don't want to be trading randomly anytime in the market. You want that time when there is high activity. Okay. And it does not actually replace it, right? It does not replace your hedge, but it supports your hedge. The kill zones, they does not replace your hedge, but they support your hedge. Okay. So also that is very significant for you to understand. My final thought is this. Uh, Kill zones, they increase volume, they increase liquidity, and they increase potential, but they do not guarantee setups. Therefore, you need to trade the setup and not the clock, not the time, because timing supports your hedge and it does not replace your hedge. Okay, that is very significant for you to understand. And also, maybe sharing this from a perspective, when I started learning ICT, I came to understand about the kill zone. I used to treat kill zones like guarantee opportunities. But once I stopped forcing trades during those sessions, my consistency improved because there was less pressure and better decisions, right? And therefore, my final take or my final thought is this: patient during volatility is a skill. You need to be patient. Yes, we are within a kill zone, high activity, but if there is no structure, then don't take the trade. If there is no setup, don't take the trade. If the setup is not A plus setup, don't take the trade. Wait until maybe another setup comes, because in the financial markets, there will be so many opportunities, so many setups unfolding. Then remember, discipline beats activity. So you have to be disciplined. You have to be consistent. Discipline to be consistent. Discipline to follow your trading plan. Discipline to follow your rules. Right? So, and I believe with that, if you look at kill zones with that dimension, that perspective that I've given you, you will start seeing improved performance in your trading. Right? So, in the next video, I'll be showing you one smart money concept entry model that works across all pairs. A simple, repeatable framework you can apply consistently without overcomplicating your trading. Until the next one, keep safe.